here on Win FM. This program is brought to you by the Bank of Nevis.
Home. It means something different to everyone. It's a place you love, a place as unique as you are, a place where you can be yourselves, a place for life's big surprises, and not to mention the small ones. Moments to cherish and moments that last a lifetime. It's a place for nurture and a place where you can grow together. It's home. So whether you're building, purchasing, or renovating, the Bank of Nevis is here to open the door, giving you the confidence to dream and the help you need to get there with a mortgage loan from the Bank of Nevis. The Bank of Nevis Limited, improving the quality of life.
That's right. Welcome, everyone, to another edition of Money Matters right here on Win FM, which is brought to you by the Bank of Nevis. And you're probably wondering, if you're a first-time listener, what is Money Matters? Well, it's a literacy public awareness program with our financial coach and consultant, Mr. Tally Francis. And it's brought to you by Win FM, like I said, Bank of Nevis. And, of course, Mr. Francis, the most important person bringing you all of this information. Good morning, Mr. Francis.
Good morning, Sharon. How are you doing today?
I am doing well. How are you?
Glad to be with you. Glad to be here with our listeners.
All right. And I'm sure our listeners are keenly awaiting a continuation of our conversation from last week. I'm pretty sure. And so for those who didn't tune in last week and you're wondering, well, what were they talking about? Well, we were talking about how to save money on mortgage loans, renting versus buying. That's what we're doing today. But we were talking about mortgage loans and, we ended talking about, is it better to rent or to buy property? So we're going to expound on that a little bit more today. So if you didn't hear last week's version, you could always go back on our social media pages and check that out. Facebook, YouTube, yes, you'll find them there. And we're going to continue today along that line. Okay, so last week we scratched the surface a little bit on the question of whether it's better to rent or to buy a home. And judging from the feedback and listeners, we decided we're going to extend the topic a little bit because they want to hear more. So Tell them more, Mr. Francis. Tell them more. Me too.
Sure. Let's start right there. Indeed. Because many renters, persons who are renting, they're torn between, whether to continue renting or to buy a home, whether to go into the market to try and purchase a home, purchase land and then build a home, things like that. So generally speaking, we know that purchasing a home makes a lot of sense in the long run, perhaps even much more sense. But making a decision is often, not so straightforward. And I guess that's why we have these requests to talk about it.
Right. So I guess it would depend on the pros and cons for each person, each family, whether to rent or to buy.
That's true. That's quite correct. Because you'd have to check the factors that make it the right time for you to buy, and those that make it more beneficial for you to buy instead of keeping on renting, or that make it more beneficial for you to keep renting instead of buying at the time. You have to check and to weigh as you say, the pros and cons.
Okay, so what are the advantages of renting?
So if you, yes, there are some advantages of renting, yeah? Depending on where you live, for example, in the country, renting have certain benefits. And the main one of them is that you find that the monthly rental payment, the amount you pay for renting each month, may be lower than what a mortgage payment would be for you. I mean, the mortgage payment for a similar or even the same property. And so, you might find that as an advantage. And a further advantage of renting is that, perhaps a secondary one is that, the landlord is responsible for all the property, upkeep and renovations and taxes and insurance and so on. But still, these benefits, truly, when you think about it long term, are outclassed, I would say, when compared to the disadvantages or drawback of renting.
I mean, I doubt if anybody who has the opportunity to buy a home would rent instead, because, if you put some money in front of me right now, I'd be like, I'm buying something. I'm not going to be renting.
Yeah, it's true, it's true. I mean, if you can afford to buy, even with a mortgage loan, even though you had to take on a mortgage to buy, and the other factors do not prevent you from buying, say the disadvantages of renting could be huge. I mean, it's better to buy rather than rent. For one thing, there is a loss of value that you experience over time when you are renting and renting and renting. Let's say, for example, let's say you're renting a home for say $1,000, right?
Mm-hmm.
And $1,000 a month. Let's cover a 2-year period. That means that's $24,000 in rent that you pay, and that $24 straight up is just expenses. You're just paying that money into your landlord. Of course, what you have to show for it is that you had the time spent in the house. But on the other hand of that expense for you, check the landlord that you pay. Compare your expense to the landlord's gain from your renting. See?
True.
Mm-hmm.
So
And this landlord now, I mean, you might think that what's happening here is that the landlord is accommodating you and you're okay because you don't have to do the extra spending and so on. But just from the money point of view, every time you pay that, it's an expense and you don't have it anymore, and it is not doing anything more new for you. See?
yeah, I mean, honestly, you're paying the landlord's mortgage.
Well,
Truth be told, yeah.
Practically, and that's the point of the disadvantage, because usually the rent payment, when we pay rent as renters, the money we paying for rent usually is strongly linked, especially if we have a recently built house or also, but it's strongly linked to the mortgage payment of the landlord himself for that property. So this $1,000 that we pay, and if that equals the landlord's mortgage payment or a substantial part of it, what it means is that as we pay the rent, we developing the landlord or helping the landlord to develop his equity in his property. So through our payment to him, he is becoming less indebted on his mortgage and having more equity or ownership stake in his own property. I mean, we're not bashing landlords, of course.
Of course not.
What we're speaking about here is just an individual or a family taking things into consideration when determining whether to buy a property or whether to continue renting, because landlords do provide that very good service. They provide, they addition to the whole stock in the country. So, you have places for people to live. But if you have to face that decision whether to buy or to rent, this is one of the things that you'll be doing. You have to think about it. And in addition to the landlord getting that kind of benefit that you are paying to him, remember, generally speaking, they say property values increases over time. Well, that is true. But let's suppose that same property that you paid $24,000 in the 2-year period for, the value went up by say $10,000 or $20,000. What happens there is that the value of the property appreciates, and that's a gain to the landlord. Another technical term. When I say appreciate here, appreciation in property means the value of the property, if a valuator appraises it, is greater today than it was yesterday. So land prices tend to increase, housing prices tend to increase over time. Barring dilapidation or running down property and so on. So that's the way you think about it when you think about renting, that you are actually having an expense and all you get for it is a roof over your head at a time, nothing long-term or future-wise. For the landlord is good.
Okay.
For you is also good, but what do you think?
Yeah, but what if you bought a property, a home with the same monthly payments that you would be paying to a landlord? Does that help out any?
Right. Well, you're spot on with that way of thinking, and you see that's the way. You actually jumping into a money matters tip right there, because the renting versus buying, thinking about it the way you have just thought to ask this question, is indeed something that will help our young people, that will help our families, and that $24,000 or the $1,000 per month that you would be paying if you had bought the same property and now paying a mortgage is $24,000 or $1,000 every month that is giving you a bigger stake, a bigger ownership stake, more financial wealth, more property wealth for you and for your future generation, for your family and so on. So That's what would happen if you went the other way. So yeah, the $24 now would be all yours. There is no landlord here. And I know for people who rent in, that might be making you grind your teeth and feel like you're really off the ball, but not really. Don't feel bad about it, because every journey starts somewhere. And if you're not renting, if you're not looking for a house right now, but you're renting and have been renting for some while, maybe you're just a young graduate, a young child working in the first year, a young person working in the first year, second year, third year, you're living with your parents. But this is the time to start looking to help to move from renting to buying. But there is no shame in renting.
Of course
Because
not.
while you're renting, you actually can do quite a bit, But where we give the encouragement from the money handling point of view and the savings point of view is that how much better would it be that your money is really giving you more equity rather than a landlord?
Yeah. And that's the bigger picture that you have to look at, really.
Yes, that is true. That is true.
Sorry, you were gonna say?
Because you want as much as possible in being able to handle your money. That every dollar you spend, especially if it's a dollar that can do something for you tomorrow or into becoming more financially healthy tomorrow, you want to make sure that that money is working for you, not for someone else.
Okay, so, and sometimes mortgages are pretty high, won't tell a lie, and then you have to sacrifice, food and maybe going out, travel, that kind of thing. So how do you make the best decision on whether to buy or rent?
Correct. Money Matters tips right here for handling your money well, for lowering your stress level and for building your wealth. That's where we go in there. Now, if a person, right, how you make that decision? If a family, a person, a couple, maybe, if you're not yet financially stable, then I will be the first to say it's better to rent in the meantime as you try to get a hold of your money and put yourself in a good financial position. Although I must hasten to tell you that depending on where in the country you live, as I said earlier, rent might be the same monthly expense as if you had a mortgage. But even in that case, it's good to consider taking out a mortgage. Even if it's lower, slightly lower, once there's not a big gap, then you could begin to do that. Now, to help you decide, you need to think about choosing a home that is suitable for you at the time. So you had to look for a kind of house and a location and all of that you would be interested in. You determine if you have enough money on a regular salary and if you have a good prospect for that salary going down the years to come, to help you make the decision as to whether to buy in the first place and then what level of property you could start looking for or be able to afford. But if not, then it's better to rent for the time being. If you look into your situation and you can't see your way, you can't see the possibility, it's to rent for the time being. But the key thing here, the key tip here is that while you're renting, start to behave as though you had the mortgage. And a good way to do that is if you're renting for and you're paying your landlord, say $600, you could have afford to pay maybe $800, save the next $200 towards the down payment for a home at some point coming up. In other words, be intentional about it. Say this is for my housing, my roof over my head, and although I'm paying this for rent now, I will put aside this because if it was a mortgage, I will be paying this amount more. Let me see if I can do it. And you physically, intentionally try to do it, moving that money into maybe a different savings account, or if you're very disciplined, leaving it into your current savings account so that you can prepare yourself. So you, in that way, you're getting yourself to being able to afford a mortgage for either building or buying a home in the period to come.
Okay. From another aspect, though, say you're renting and you're thinking of either getting property or maybe you even have land that you've been paying on and maybe you're close to, paying it off. Is it better to buy a home or to build? Because, building is stressful with all the decisions you have to make. The contractor annoying you because he gave you a timeline and that is not the timeline that you're working at now. How do you navigate that?
Yes. Well, that's a serious question too. And I mean, once you reach that position, if you had already bought the land and the land is in an area that you like, that you really would like to build on, to an extent, you're sort of in the direction of building already.
True.
So you now have to work on whether you have the option to sell that piece and buy an entire already built property somewhere close by in that area, or just try to get the best deal to build. But here is what I did last time I was asked that question. The first thing I did was I called up a couple contractors, not just one. I called up a few contractors, those I could find at the time, and I asked for the cost of building a 3-bedroom house. Of course, they ask you how many bathrooms you want in it, right? But once you get a detail, you get a standard house that you're thinking about without even paying for any design or architecture fees yet. And you ask how much it will cost. You're going to get some ballpark figure, right? You're asking for a ballpark figure. They might ask you, well, do you want a high-end one? Do you want a medium one? Would you want to have just regular, ordinary finishes and so on? And you make a decision. Now, when I did that, the average I got was about $585,000 for a house.
3 bedrooms?
To build, yes. In those days, we're talking about a couple times back when I was, having to answer this question some time back. Then the next thing I did is that I looked for the same type of house, a 3-bedroom house, on the internet, in the real estate market. The real estate people, they put up on the internet, on their websites, houses for sale and so on. So I look at a few of them and see what the prices were and so on, try to work on average, You don't have to be too mathematical, but that's my mind. So that's the way I did it. So I had $585,000 on one side if it was to build from the contractors. I'm trying to be kind of scientific. I see that houses, if I wanted to buy in those kind of areas I'm looking at, it was about $409,000. For me right there was a difference of buying was cheaper than building. Buying was about $176,000 cheaper than building. So you see, right there, I could have a space for my decision one time. After that, I'm looking for other criteria and other factors. But I would say, if right now you're torn between building and buying, it is a route you could take. Check how much might be the average cost or the total cost of building a house of the size that you like, with the features that you want: 2-bedroom, 1-bedroom, 3-bedroom, 2 bathrooms, 2 porches, car park. If you put in what you want, see what it will cost. Look for a similar house, because we are not building houses for the first time in life. There are houses existing close to what we're looking for already, and then the difference would encourage you into whether or not you have a big gap between building and buying. So, Sharon, if you had a gap between building and buying in today's environment of 60,000, 100,000, your decision is almost made for you already, isn't it?
True. And then, because I watch way too much HDTV, I might even go a little bit lower, like if the house is a little bit older, and then maybe try and do what kind of upgrades I would want in that home. Mind you, it might work out to be the same thing, but at least I would have gotten it cheaper and then have a little bit more money to play with to do the upgrades.
That's a big point, because and not only that, it means that you can, if you were doing it with a mortgage, you could already determine what size of mortgage you want, either to include the upgrades, or you could decide, but I know what upgrades I'm going to do. Let me get that mortgage, let me get a house under my belt, then let me start paying, and then I begin to behave again as though I want to build a second part of the house, or I want to do that upgrades I'm talking about, by saving. And you may find, Sharon, that you will be able to do those upgrades without even borrowing another cent.
Yeah.
Because you're already in the house and you do the upgrades as you go, quarter by quarter, or you do it in preparation for Christmas this year. You do something else in preparation for Christmas the following year.
Yeah, no, that's a plan for real. That's a plan.
It's a plan. But the word plan is important there. Plan. Again, as we say, you must have the intention to do it. You make a note that this is what I want to do. Even if it's a mental note, once your brain is like a good piece of paper and a pencil. And you work towards it, because you now know what you are going to do. Then your money now You tell your money where you want it to go. You are going to the upgrade. $50 in my upgrade fund every month. What am I trying to build up? Enough money to be able to change up all of the closets or all of the cabinets in the kitchen or fittings in the wherever in November in time for Christmas.
Yeah, because you can make a little what's the word I'm looking for? You might get a little discount. Yes, it's the discount I'm trying to find. Jeez, all right.
Yes,
Yeah, you'll
yes,
get a
yes,
discount when
yes.
you do it down there because most of the businesses kind of cater for people who are trying to, do little upgrades around the home as well. And you might get something a little bit cheaper than, the standard price.
Right, right. And from the money point of view, once you're preparing for it, it means that your money itself is doing what you want it to do. You tell it, you are for my preparation and you are not for my grocery. You are for my preparation, you are not for the party tomorrow night.
Right. So the importance of comparing costs is pivotal. So you have to compare between the two.
Yes, you compare between the two and you make sure, always check to see, is the gap bigger buying or building? I mean, it's a big decision, so you really don't want to make
rushed into it.
Yes, that's right. But if buying is cheaper, then you start searching for the area that you would like to buy and live in. But if building is cheaper, then you want to start looking now for your contractors who could help you, and these are financial factors, but there are other factors as well. Right? For example, you may already have the land, as you mentioned earlier. So with the land, you have the opportunity to build. Definitely would be much more, feasible for you.
Oh, sorry. I thought you were saying something else. Sorry. I was like, oh, I think he's finished. Because I was actually coming up with another question too. I guess, like you were mentioning also in terms of where you plan to live. That's also very important because it might be more expensive to do something in town and it would be cheaper to do something in the countryside.
Right. And not only that, some areas are already developed and they already have the kind of houses, they have the environment, they have what you would like to, the place you would like to live, they have everything there. So, you decide on that because certain zones or areas, residential areas, would be higher priced than others. So you want to take those into consideration as well when you're thinking of building or buying, as well as when you're thinking of buying coming out of rental.
Okay. That's a lot to think about, honestly.
A lot to think about.
A lot to think about.
I mean, other things are like you might prefer to be a first-time owner of a house rather than to go and live in a house that other persons have been living in for the last 10, 15, 20 years, right? You might want to have your own design, the own size
your
of
own layout and everything, yeah.
Yeah, you may want to have that. So building would be more important for you. And even if the price is higher than buying an existing home, then you will be driven by the question of, can you afford a mortgage, a down payment, or cash based on your situation at that level of house?
Okay, well, we're almost at that point where we have to end the program, but are there any more closing thoughts that you'd like to share with regards to how you can save?
Right. So going back to that very important need, housing is an important need. And as we say, when you're doing your financial, your personal money management, you want to put housing as a critical part of it. And so even if you are renting today, what you want to do is to have your housing get to the area of at least about 25% of what your salary, what your income is. If right now in paying rent, your income is just about 10% of your salary or 15% of your salary, you try to get it up to about 25% using the amount that you're not paying for rent to help you build up a down payment for buying a house. Because generally speaking, the financial advisors usually say, try to have your house expenses, your mortgage expenses, and so on, your monthly, not exceed 25% of your take-home pay, 25% of your take-home wage or salary. And the reason is that if you are in that zone, it means that you are financially healthy. It's more easy to do other things to your level of your standard of living and style of living is better if you are 25% only on housing. So you want to do that if you are working through that whole decision as to whether to buy or to sell, or whether to take out a mortgage at this time, whether to buy, sorry, or to build, or whether to take out a mortgage at this time, right? So those are the tips. I mean, if we continue down the line of being worried about mortgages and worried about whether we'll be able to afford that thing long term, and therefore we want to be comfortable in renting, perhaps, just look back and see if it is not just a fear of taking on a responsibility. Maybe that's what it is. It could also be that you really having a hard time to get a piece of land, right? So again, you think about, let's keep building still my financial savings and so, because by saving more, I'm getting to a position where even if I'm not getting land in an area that I want, a house might come on the market and I will have enough money saved up to take advantage of the sale of that house that comes on the market. So you think in that way. The tips we're given here is just resting on one major foundation, that we have to be intentional. We have to have it as a purpose, as a goal, as an intention, as an objective, and have it there in the way in which we behave as well, so that the money could actually operate in that same way. Going in the direction of bringing you to the point where you will own a home, bought or built, mortgage or not.
And have a timeline and try to stick within your timeline. You might always not be able to do it, every single month, but you dedicate a certain amount of time and say, this is where I'd like to be.
Yes.
For when I either, build a home or buy a property.
That's right. And time, that word timeline is, it's so important as well, just as the word intentional. Because the thing about it is that it is said that if you don't have it on your mind, then you will not have it in your actions. If you don't think about it, if you pay no mind to it, you wouldn't just jump up one day and everything will be ready and you move into a house. You actually have to be preparing for it, and preparing for it in a proper way. And timeline is important, because if you don't start thinking of it now, then the likelihood of you achieving it in 1 year's time is less.
Yeah.
Now, this is very important for young persons as well. You just out of college, you just have your first job. Maybe your job is just a teller somewhere, or a sales clerk in a department store. It really doesn't matter what your job is. It even doesn't matter what your salary is. Generally, we tend to think that people with big salary could do this and do more, and if you have a small salary, you don't start to think. Dare to dream, and dare to dream and begin to prepare to make that dream a reality. How do you do that? Taking practical steps. As far as money management, personal money management, and family budgeting is concerned, that means every month you find a time, dedicate yourself to thinking of your timeline, and dedicate yourself to reviewing, did I do my monthly saving? Can I do $20 more? Should I put it in this account at this credit union or this bank where it is harder for me to use every day on ordinary things? Be intentional and put your action to where your dream would be.
I like that. Be intentional. We're going to take that word for today. That's our word for today, for the rest of the week, actually.
That's right.
All right. Well, thank you so much, Mr. Francis. We look forward to seeing you again. All right. Well, you're not actually here, but you're doing it by Zoom. But we expect to find you right here on this dial, 98.9 1FM. Thank you so much for another informative program, and we look forward to see what you are coming with next week.
Thank you very much. Good day to everyone, and blessings. Next week we may do. I will come and tell you. Next week we promise that we will do the how to save on home repairs.
Oh, yes.
So we may stay
That's
right
important.
there. Yes.
That's very
Yes,
important.
yes.
All right. Thank you so much. Looking forward to that one too. Don't worry.
Okay.
Have a good one.
Have a good one.
And that was Money Matters. You can hear it right here on Win FM every Wednesday morning from 10:15 until 10:45. And this program is brought to you by the Bank of Nevis.
Have you heard? Owning your very own special piece of St. Kitts and Nevis has never been easier. The Bank of Nevis Limited is currently offering 100% financing with up to 15 years to repay at a competitive low interest rate. Additionally, a Visa credit card to make your day-to-day shopping needs easier. Contact us by phone or call into any one of our branches today. The Bank of Nevis Limited, improving the quality of life. Bond strong. Like us on Facebook, Instagram, or YouTube. Offer ends on June 30th, 2022.